day trading model using ICT Concepts. So for this particular lesson or video, we'll be using USD for case study. Okay, just before we get started with the lesson, I want to tell you about something which I observed in price action. Yes, ICT talked about this, and as well it's just very clear to see. Now whenever you have a long bar like this coming in, a long bar or series of long bar, expect series of short bars, like small bars. Let's just go down a little bit. So you see from here we had series of small bars. Had this one that looks long, small ones, a long one, small, a long one. This one reduced, kind of went. So it always happen whenever you see price go a very big move in a day. Expect the next day or so to be kind of small, and especially when you have a collection of many big days, like large range days, or a collection of many, let's say, kind of tight small bars or consolidation days. Expect a big range day. So this tells you what to expect for the next day. At some point you might have 3 days going on with large range, or 3 days going on with small range, but that's just it. It's something that happens oftentimes that I observe. Okay, so now we're on the daily chart. We want to be able to study price and then break down to a lower time frame and take an entry. So, and I will show you that in this particular lesson. So this is giving you a day trading model that you can use, that will be very helpful for your trading and all that. So let's take note of some places. Now because we're on the daily chart, there are some we have to mark out a whole lot of things, but I will not do much. So I will mark out some of these key areas. And what are the key areas? Such as high, lows, and fair value gap. So I want to take note of this area. One, this is very obvious. It's visible. I also want to take cognizance of this high. So I've taken note of those highs, and as well I want to take, now I didn't want to involve this, but I will take this particular one and I'm going to change the color, and I will tell you why later on in this particular lesson. So I will tell you why I'm using it. I think I want to stop it here. Okay, or let's get to the next one. Okay, so I will use another color for it. Okay, so I've marked out this, let's say, highs and lows that I can see on daily chart that are clear. Now please, another place you need to take note of is previous day highs and lows. There are also areas that kind of attract price, so they are very vital areas to take note of. Previous day highs and lows and all that. So for this very particular trading day trading model, if you've been following this channel, see that I told you about something. Whenever price displaces a high, we wait for it to form an opposing swing, then it will go up. I've talked about it, so let's still go there and talk about it a little bit. Price displays this high. What is displacement? When price uses the body to take a high, so displays this high, went up, formed an opposing swing, which means a swing low, and then went high. Assuming it's a swing high, it's not an opposing swing, so form the swing low, then continue going up. And if you don't really understand this, is not clear to you, just check out for the video on super trading model for 2025, or check out for the models on ideal perfect shift in market structure. So check out for those previous videos. They'll be very helpful for you to understand. It will be very helpful. So let's break down, let's transpose and focus on this particular price leg. So now price went low, and when price was going low, price dipped into this fair value gap and then also came down to this other block. I don't want to do a whole lot, so I don't give you too many context or information. So this is this fair value gap, and this fair value gap makes sense because only the week went out, and the wicks, they do the damage, right? The body tells the story. So it went down into this other block, but that's not my focus. So because some new persons might be confused about that. So now when price went down, my problem is not where it's going to, because I didn't even use it in this particular scenario. I was waiting for price to simply displace this high. Price displace the high, and once it have displaced this high, I'm now waiting for the what? The formation of a swing low. That is the opposing swing. So right here, this is a swing low, and then we went up 50 pips. That's what I like to target. That's the 50 pips agenda. Let's see, exactly 55. So that's just it. Now I want to mark out various price leg, and then okay, we still have another opportunity anyway. Now for this particular high, watch, when price took it, it did not displace, it only rejected, so went wicked through it and came down. That is rejection. But from this point, when price really displaced this particular high with the body, what happened? A swing low was formed here, right? Yeah, so we have a swing low forming here. This is a swing low, and then we expect price to keep going up. I don't know if this makes sense. So but I want to start from this particular price leg, so I will mark out this place now, because after this is the swing low. 1 2 3 make swing low. So after this point, we are expecting price to do what? To go up. Okay, this should be, oh sorry, the one I measured should have been this one. Let me explain again. It should have been this exactly, and this is about 90 something pips. So look at it. Once price takes this high by the body displacement, a swing low formed, which is 1 2 3 3 candles or 3 bars makes a swing low. So this is the one we start targeting to go up from. I don't know if it makes sense to you now. So this one now took away this high, and also this high displaced it. What are we waiting for? We are now waiting for the formation of what? A swing low, and it has formed here because this 1 2 3 makes a swing low. Then we can target going up. So I will show you how to utilize this for this particular price leg, and then we'll see how we can make good use of this. So this one's, I want to mark this one, this second one, with white. So I can use white so that it does not confuse, and then also these other ones before we start talking about going down. So now remember, every time or most of the lessons I give in this particular community, I give the rules, but for some reasons the rules are very important, and I'm also working with rules. So what I'll be saying now is that most of the rules I'll not be writing them down again. I'll just make a video or a lesson. So what you just simply do is that please get your pen and your book and write down the things you are observing. Is very important. Yes, for me, journaling really helps me as a trader. So that's why I'll tell you to, like, it's something I can encourage you to do. So let's transpose to 1 hour time frame. Remember, we are working on the daily model. So we want to catch the entire daily range. We want to catch the entire daily range. Okay, just back to this daily chart. Let me do one more thing before I continue. Just one more thing before I stop. So this was the last bar. I want to mark that bar. Let me use everything. This was the last bar before we saw the next one. So I want to break to a lower time frame and see what it looks like. That's why I wanted to mark it. Then I'll still remove it. So 1 hour now, we're transposing to 1 hour. Okay, so this very bar was the last one. Look at that. If you want, this line is not white. Let me change it to maybe a color that you can see clearly. The purple. Exactly. So this particular line now delineates this one. So this one, if you watch, this is the high and the low. So these ones we are the next day. So I want to go back here and I want to stop here. Exactly. So this is the price action I want to focus on. So let me use maybe random color, and okay, so this is the last price that formed. So this one confirmed the swing low, which was here, and then I want to go up from this particular point. So if you want to go up from this particular point now, so this is the swing low, it has been formed. So it means I want any price action coming up around here now to be, what's it called, to go up, which means this next day, I want this day to be a very bullish day. And as you can see, I told you why. After the swing though, that is the opposing swing, they want to go high. So I want anything happening here to be what is it called, bullish. So I want to see a very, very upward movement on this very day, and I have my reasons from the narrative. So from here now, you can see that at this very point, this is previous day high, this is previous day low. You are looking out for a last fair value gap on the end, like towards this end, because if you talk about a bearish run, like from here to here is a bearish run, the last value gap is the value gap on top, while a bullish run from here to here, the last value gap is the one down here. That's the last fair value gap. Okay, so want price to get to the last value gap down here, and then we can now go up. So right here I can clearly see that there's a fair value gap from the previous bar that formed the swing low. So let's take it, let's draw it out on time. Okay, stop here first, then I will drag it. So let's go over to this. Yeah, FVG. Okay, so I've marked out the fair value gap now. So now we have this fair value gap from this is not this now. Why I use this one is because from this very price leg, because I look at a whole lot of things while studying price. From this very price leg up until this one, because this is the day we want to trade. Excuse, this is the day, this between this is the day we want to trade. That is this 24th of December, right? Yeah, this is the day. Okay, 18th of December 2024. So we want to trade on this very day. That is our focus. That day is our interest, is of interest to us. So we want to trade on this very day. So we are looking at for something we can frame, an idea we can frame, or a context we can frame that can support our forecast. You understand? So from this very point to this very point, I've marked using my fib. So from here to here, I've marked using my fib, and I want to identify that very point where price will get to before going up. Now, so this is the particular trading day, and all of a sudden price started going up before it happened. So what happened is that when price went up, price dipped into this particular fair value gap, which means from the line of defense we talk about. So that is the line of defense, and something is happening here. This is the swing low we had from the three bars coming to form a swing low. That is the opposing swing. So let me still mark it so that we can be very sure. Let me not mislead you. Let's go to the daily charts. Let's go to the daily charts. So you see what I told you, that this particular low was the low of this three bar 1 2 3. Look at this one ends here. If you want, I can still remove this line. Let me I don't know if it's possible for me to remove it. Okay, let me hide it. Yes, so you can see that 1 2 3. You can see it, right? Okay, let me Ctrl Z, so it's back. Okay, so that's just it. Like I told you, this is the line I marked. Thank God you can see it. So let's go back to that 1 hour time frame. One thing that really helped me in trading is the ability to navigate through various time frames. You need to be able to, change angles, and not just changing angles for the sake of changing angles with context. And what I mean by changing angles with context is moving from one time frame to another, transposing whatever you get from the higher time frame up onto the lower time frame, and being able to execute precisely. So from this very point, this is the low, this is where your stop loss want to be. So maybe you just open the day open and you bought for it to go up, your stop loss should be here, and in fact you can see price didn't hit you because this was really a swing low. So for me, I would like it to align with context, and context is when it gets to this line, so this line of defense, which is the fair value gap. 1, it has gotten to this line of defense. 2, it has also gotten to my OTE. And what is OTE? This region, the region between this 79 and all the way up here, that is my OTE level. So this is my OTE level. I can change it to, okay, so that region is my OTE level. So whenever price gets into this region, I'm interested, I want to participate. But let me remove it. So the OTE region and the fair value gap region aligns, making a whole lot of sense to me. Okay, So once price, this day we didn't take any entry, so once price dips back into this value gap from this very new day, we can start looking for kind of buy setup. So from here I can transpose to a 15-minute chart and see. Remember, I like value gaps aligning in 2 or more time frames. That confirms that is a high probability fair value gap. So let's see on the 15-minute chart if you can see. Look at this now. So we have fair value gap 1, fair value gap 2 here. So on the 15-minute chart, we also have fair value gaps in this place. So that means it makes sense. I'm not going to draw on that one. This 1 hour fair value gap can serve since the 15-minute fair value gap overlaps with it. So immediately price gets to this place. So let's also check let's also check the time, the time, or let's say the zone of entry. So this is Asia. When price came into this place, which is so this is Asia, this is London. When price came into this place during the Asia, because at this point don't take any trade here, please don't take any trade. This is not ideal to take trade. Enter in a Q zone. So this is a Q zone between this region from 8. Okay, let me mark the Q zones and identify various trades we can take from there, and also show you some things we could have done. Okay, so from here now, see, watch, this is 8. What am I going to, let me use yellow, and 8 to 12. I want to 8 to, okay, yeah, 8 to 12 a.m. So that's it before London. So 8 to 12 a.m. Let's not transpose to 1 minute charts. 1 minute. So because that's where I like to frame my entry. Okay, just a moment. We are looking out for the listing I marked. Okay, so let's go into this Asia. So we see that now when price got into this point, now this pair, I don't think this pair does excellently well during the Asia. So this is not a pair I trade during the Asian section. It's not a pair I trade during the Asian section. So now working with context, immediately price came into this fair value gap, which is at this point. I'm not looking for any swing low before it. I'm looking for the swing lows that formed, here. So this is a valid swing, sorry, a swing high that forms because we are going bullish now. This is a valid swing high, and I'm going to be interested in this swing high. I want to see how price reacts here. So price has displaced this swing high, this one, and also this one. Now you can also use this one, but this one is more significant. It's clear to see, and it's inside the region. Price came back again, and then finally clears it. So now price have cleared it. You can use your gun box from here. I think from here to here is good for the displacement. Okay, yeah. So once price comes back into this region, let's extend it out. Once price comes back into this region, we are already buying back into this region. So let's buy. We are going long. So from here, target 1:2, or target all these highs here. You trade with context. That is what I would say. All these high here should be targeted. But then another part you need to trade is, if you want to trade, this is me now trading from 1 minute chart too. And that part you need to target is previous day high. Look at the previous day high. Let me bring it down. Exactly, this blue shaded region is the previous day. So all the way here, I know you'll be afraid actually, because me, I don't even like taking this kind of trade. It's looking quite funny. So you need to be able to capture everything all the way. Okay, oh sorry. So you need to be able, this is our maximum target. Most times when price does this kind of setup, it takes the previous day high if it's a bullish scenario, or it takes the previous day low if it's a bearish scenario. And where will your stop loss be? Your stop loss is just going to be in the low of that swing low that formed. I don't know if this is making sense to you. So please, if this does not make sense to you, simply watch this video again, pause it, take it back. This is quite complex, and I don't know how I can make it quite simple to you. I'm just trying my best to break it down, because sometimes I do wonder, are you sure these things you're explaining, somebody is really understanding them? Because when I started trading recently or newly, it was not a funny experience for me. Everything sounded like Greek. It sounded like, for real, it sounded like Greek. So from here, this is where you enter the trade from here now. So from here, then I will show you something. This is your target. Your target should be these very points. If you want to trade, like if you want to, that money you've been planning to make since they don't you've not made, you're going to make it, but just give it time. So this is this kind of setup. You see, this is about 1 ratio. What I want to see, what the reward, about 4.6, 4 point, that should be more than 4.6. Are you serious? Okay, so no problem, sha. I don't know if it's from my setting, but it looks more than 4 because you are risking this. But then I want to bring my stop loss down here if I want to trade everything. So my stop loss will be down here. We are aligning with that distance, so, and then I'll target the previous day high. Anything more than that's fine. But then because we want to trade Asia, and me, my trading system, I like to nimble. I don't like waiting for when price will cover the whole big move. I just want to take it small, and I'll go at, just sip small, leave, come back again, sip small, leave, come back again, because I don't like losing. You get? So put your, what is it called, your stop loss here at this swing low or this one here. Let me zoom in. So once you put that, target simply 1:2. Okay, no wonder. I was now wondering. Sorry, I've seen what was the problem. Then let me calculate it again, because that thing should be more than the risk to reward was just too big for it to tell me that is exactly, it's already giving 16. I'm telling you, it should be heavy and massive once it aligns with context. This is one shot, one kill. This thing you take that forms once in a while, you understand, and then it's so beautiful. So then for the stop loss, you can decide to put the stop loss here. Okay, it's still the same thing because I risk more. So you can put the stop loss here, or you can put the stop loss at the end of this what is it called, this fair value gap, this 1 hour fair value gap. And then this is I think this the what really drove price up that much is this particular news that came out here, either an FOMC or so. So the beautiful thing I like about news is that, okay, as a new trader, I don't want to trade news. It can actually hurt you. But one thing about news, because I trade CPI. One thing about news, I trade CPI and retail sales. Yes. One thing about red folder news, like the high impact news, most of them, when they align with your narrative, they don't used to cause that seek and destroy. Especially CPI oftentimes, or most of the times, is more like a one-way something. It's not like NFP. NFP will go down, take the support out and then go up the support out. No. It doesn't really do that seek and destroy kind of stuff. Even FOMC does that sometimes. FOMC does seek and destroy. But the major thing is understanding the narrative and the context. So you don't use anything outside of context. Even when this seek and destroy happens, see that price was reaching to a particular area before it reacted. So they all work with narrative. So this is for Asia. But the best time to trade this, because most times the low of the day in this kind of pair is formed during the London. So the London setup should be the perfect one. And once you get an entry during this London, between this between 1 a.m. and 5 a.m. Once you find a kind of entry, what do you simply do? You simply target that previous day high here and then put a stop loss down here. So that's what you can do about it. And then, like I was saying, I don't want to go deep and explain this entry again. I wanted to show us something else. So this is how you can actually frame your daily trade. I wanted to come back here and show you something, but I was thinking there was no need. Now for those of you who used to, or who is still finding some things I say complex now. So this is Asia. This is London. I don't know, sometimes I have this problem. If you've been following my video, you notice it. I kind of talk fast. Yes, and it makes me misplace some things. Maybe I'm saying high, why I mean low. And for me, I want to make these videos not too long, so I'm kind of trying to talk fast, because if I relax and take my pace, I'm going to spend a whole lot of time. But that is not an excuse for my inefficiency, my bad habit. I actually like talking fast if I'm communicating, and then it makes me to stutter sometimes or that, but it's not a challenge. If I relax and take my time, I will talk well, and I'm going to learn it. But let's get back into the chat. That's not the focus of this. So from this very point, this is 1 a.m. the time. Please check out the lesson on Q zone, ICT Q zones or trade sections. Check it out so that you can follow duly. So at this very point now, this is 1 a.m. Price dipped into this value gap once again, which is a very strong line of defense. Why is this value gap a very strong line of defense, and why do I not want it to be violated? A swing low was formed, and from that swing low, I'm expecting only a bullish run, which means this value gap should be very, very strong. And apart from the fact that it's going to be very, very strong, your stop loss is already covering you at that swing low. I hope that makes sense to you. So now, during this London section, price came in here. Until price comes into this value gap, I'm not going to identify any swing high. So this is a valid swing high for me, and I will tell you why. This is a valid swing high because it's formed after price have dipped into, what is it called? Let me extend it to the right, into that fair value gap. So price dipped again, forming a stop hunt. Beautiful, making so much sense. This is a stop hunt, so which means it took the previous low, and we are not going down. No, please. Now look at the problem. Because this displays towards this end, somebody is thinking it's going to go down. Now somebody was telling me something. He said sometimes he used to see a buy and sell opportunity once. Now my advice for you is, when you see this that kind of situation, please go to the sideline and leave the chart, because you are confused at that point. I don't want to take any trade by confusion. That is one. Two, any trade you want to take should align with narrative. Now we see a displacement, right? We see a displacement here, so we're waiting for a swing high to form and then it goes down, which is the normal stuff I've been talking about here as often as possible. But that's not just about it. If you do that, yes, finally it went down and even took it before going up again. But that is not my concern. My concern is I want to work with the narrative. It's very, very important to me. So I'm always looking out for bullish opportunities, since everything is saying bullish. I don't want to look out for sell. So even if I see sell, I don't want to take it. Now for me, sometimes some people, you may wonder, is it that I cannot take this? I can take this entry. Watch, from here to here, from to this very low. This is a bearish run. That's why I'm going like that. So a bearish run, price comes back to optimal trade entry. You target the low. It's a nice trade for you if you trade in small time frame like I do. I like small time frames, but that is not my concern. My concern is I want to go bullish. That is my own problem now. So because of that, price came down here, took this low, right? A stop hunt, formed another high again. So our focus still comes back to all this high, and we're waiting for them to be displaced. So look at this high. Okay, now this is where things become problematic, and I will show you. So this is the leg that displaced price. Let me use my gun box and mark it out. This is the leg at displaced price, and even caused another stop hunt here. And this can be very scary to some persons. So if you don't know the narrative, you are going to think too many things at once. You'll be like, oh, they really want to go down. They really want to go down. Okay. Sorry, I don't know why this thing is just doing that. Okay. The network is kind of challenging. That's the beautiful thing about being from the country where I am from, and it's fine. But it's not much of a challenge. It's something that we can actually go through. So immediately price took away this one again as a stop hunt. Then it started going up. Just a moment. Cancel. I'm fine. Okay, it's already loading. Let's exercise some patience. Swiss franc, and the 1 minute charts. Okay. I don't know if I can still find my markings. Okay, I think it's taking time to load, and it's gonna get my markings back to me. Hope it does. Okay, I think we are back. Yeah, so this was the point here we are talking about. This video is actually going to be long from the look of everything. And I don't really like long videos, but you can take your time because you really want to learn this. So just put in the hard work, the sacrifice, and you are going to be proud of yourself. Okay, so this is it. Once price came to this place, so stop hunt, beautiful. Now price came, displaced this one with a body. Now week through, I don't trust it yet, then displace. But for me, these highs already are okay. After this stop hunt, it's significant for me, so I can take an entry from here, like if it works. So but then I want price to come back to this place, this particular point, that is this discount region that is down here. Down is just discount, see this of the color. So below 50% discount, above 50% premium, so I can buy. But price did not give me an entry. And then if you look down here, I'm seeing a favorable gap. No one what I notice about price is that price is not really random like we used to think. Price is very precise. So I want to mark out this favorable gap on and see if it was able to. And remember, we have a favorable gap here already. That is, this is the 1 hour favorable gap, and 15 minutes favorable gap also aligns there now. And that favorable gap is aligning with the, what's it called, it's aligning with the 1 minute favorable gap. Okay, for the sound from the background, this is Christmas period, and then people are kind of doing a whole lot of things to celebrate, so the noise is not something that should scare you. It's a festive celebration. Okay, so you see, price came exactly to that discount before it went up, and it came exactly inside that value gap. So this is why most times, and that's the last value gap, most times when you are taking your trades and journaling and practicing, please be very precise. Be very, very precise. Now somebody would have said, why didn't you take this trade here? I didn't take it because it didn't confirm this for me. So it was after this displacement I can start looking for opportunity. And it can be very, very confusing and not easy sometimes to identify when you say, how can you frame a trade in Asia and take it in, what's it called, how can you frame a trade in New York, right? And now this is London. How can you frame a trade in London and now execute during New York? It's actually funny, you understand? It's actually funny, but that's just how everything went. So from here, this London, you can wait. Once it comes back here, you take an entry. If you're aggressive and you don't want to miss an entry, you can enter here. Then, but your stop loss need to be below this value gap or this swing low. Then you can target previous day high, and definitely the reward is going to be very, very, very handsome. Very, very handsome. I don't know if you're really learning something or making sense out of the whole series we've been doing lately, because I know for me, I'm just taking my time to explain some things which I consider confusing, and God's willing, I believe I am breaking this down. I can't explain any further. I don't know how any other way I can make these things very clear, like the way it's in my mind. So I believe I am just doing my best. God's willing. I can tell. So let's go back to 15-minute charts. So that was how I framed this entry. So another thing I want to give you, another hack I want to give you that will be very, very helpful. I think let me remove this fib. Okay, so please don't be confused with these whole lines. You know why I marked them. Now another thing I want to give you as a hack is this. Whenever price forms a fair value gap, like this kind of fair value gap now, and then goes up and comes to it the first time, it's going to retrace. Yes, comes back to it, nice, fine. You're waiting for when price will come back and take this one. Once it comes back and take this initial one, that's fine. This is more like kind of SMC divergence. Let me not go far because I don't want to be bringing complex concept. If you check USD card or USD JPY, because they correlate with this USD JPY or USD card, definitely you might see one pulling back and then it goes up. So what I'm trying to say is that when a fair value gap form, let me come at somewhere and sketch. I think sometimes you just illustrate with a sketch. let's say this is a fair value gap and I don't know the time frame where it's forming. So this is price leg. Let's say price moves from here and then form this fair value gap, and all of a sudden, kept trading and came to it the first time, went off. You get, sometimes it can take all this high, but most times it does not. So it's going to do a kind of move like this. All of a sudden it's come back to this value gap again, then come back again, move. It might take this one or not to take it, then come back. Whenever it comes back again and takes all these lows that have been formed, most times it's going to definitely clear everything here. It's going to definitely clear every one of them. So that's just, let me explain again. So what did I say? Price formed the fair value gap, which is this here. Price came back to it. You're going to see a retracement upward, so like it will just bounce off. But I'm not promising you that it's going to take these ones are still going to be high. So price will just come up a little bit, you understand, then it will fall back, maybe not even taking this one or taking this one. Then yes, most times it will not take, still fall back to here, just a little bit bounce, not going that far. It will go up again, it will retrace. But then whenever it comes back to this fair value gap, taking every of this, then it's definitely coming to even attack all this high here. It's going to attack every of this high that has been formed. That's another hack you can be using. So what's happening here is that I'm going to be dropping the hacks for you, dropping the models, dropping the concepts. Over time, piece by piece, you're going to join them together and they will make sense to you. Definitely they will make sense to you. So for now, don't bother yourself with, oh, I don't understand this part or I don't understand that aspect. Just stay focused on the aspect you understand very well. You understand? Stay focused on that aspect you understand very well. And if you can understand that, that's beautiful. So let me go back to the 1 hour time frame. So from this 1 hour time frame, after price went up, taking this previous day high, because this is an FOMC giving you a very big move in a single day, please start expecting a consolidating and a choppy price action. Now you see, like in this whole day, see how the entire bar that was formed is, let me use see how an entire bar that was formed is actually looking small. You get, before price came back to this. Now that the concept I just explained. So what, let me not put in too much, because I want to give you everything, but I don't just know how to give it to you once. So I want to take it bit by bit. So first thing first is, whenever you see a big a rangy day like this, start expecting floppy and weak price action before price can normalize again. You understand? So back to this now. According to what I explained using that fair value gap, once price comes back to this fair value gap, you see it has taken away every low here. That was why it was able to go up all the way up. Yes, there is still a kind of slow movement here. Price is coming to attack this. Yes, it will happen. You can check that. Don't take my word for it. Check that and you see how it comes out to be, because this is more like a sell program. So this is now the buy curve going up to attack all of them. I believe this makes sense to you. So for daily buyers and how to know what to do next, most time it's not easy for me. So don't think, oh, it's just easy for this guy. No. I just used to read context. I read the logic for me to be able to stay in sync with price action. And if I don't understand what is happening, I simply leave the charts. It means my setup is not there. I can't find an opportunity. And even if I come, because I trade from ICT Q zones off 1 minute chart, but from ICT Q zone. So when it happens and I didn't see it because it didn't happen during that Q zone, no problem, I'm fine. I just take my way. I'm telling you, don't need to open yourself for much risk. And also sometimes I just used to look at chart randomly to keep monitoring a trade. Now I marked this other this lemon high initially, so that I will show you when it took a high from a daily chart. Immediately it took a high, I'm expecting a retracement. So let me say this again. Now remember, I didn't give a note for rules. Some of these things I'm saying are the rules. Please just jot them down. What I want to say right now is this: whenever price takes a high or low, expect a kind of retracement. I'm not promising you a reversal, but a retracement. Most times it can be a reversal, or sometimes it can be a reversal, but most times they're just retracement. And even if it is a reversal, once you capture the retracement, you are fine. You move to the sideline. Next time you can come back and trade. And also, whenever price move to a fair value gap or an order block, all these key levels and PD arrays, they actually cause price to react, and that reaction can either be a reversal or a retracement. But what I'm trying to tell you is that to stay on the safe side, just focus on catching the reversals. If you can catch the reversals, that's fine. So I believe this video was very helpful. So you see how we are able to navigate from the daily charts. Now we broke down to small time frame like as 1 hour, and then from the 1 hour we moved to 15 minutes, and we're able to frame our entry from even a 1 minute chart. So I like to navigate from one time frame to another for me to be able to read what price is saying and understand what price is saying. So that's why I do that actually. Okay, so thank you so much for watching. Quite a long one, I understand, but then it was worth it. Like always, please, if you have time to see this lesson again, please go through it. Don't conclude so soon and you're like, oh, it's just a simple something, there's nothing difficult about this, I don't need to even go through it again. No, please go through it again. I need to go through it more than once. And like always, subscribe, like, and share. You understand? I promise to give you valuable content. Yes, and I will do that, and you keep getting valuable content like this. Now the other thing I want you to do is please comment, because when you comment, you share your idea with me. I can be able to relate with you based on your comment. But if you don't say anything, I believe they are too simple for you and you don't have a challenge. So please do well to comment, and then we'll keep improving. So thank you so much for showing up. I appreciate